In the intricate maze of global finance and political upheaval, few figures command as much fascination, controversy, admiration, and myth as George Soros. The man immortalized in financial history as the one who broke the Bank of England, yet whose true story extends far beyond a single legendary trade and into the deeper architecture of a mind shaped by war, philosophy, uncertainty, and an almost unparalleled ability to perceive the hidden tensions that move markets and societies alike. And to understand Soros's rise from a Jewish teenager surviving Nazi-occupied Hungary to one of the most influential financiers and philanthropists of the modern era, we must begin not with currency speculation, but with the intellectual foundations that allowed him to see the world differently from everyone else. A worldview forged through personal trauma, refined through philosophy under Karl Popper, and ultimately woven into the fabric of his financial empire through a theory he called reflexivity, a concept that would become both his intellectual compass and the invisible thread connecting his most astonishing victories. Born György Schwartz in 1930 Budapest, Soros came of age in an environment defined by existential threat, where survival required not only luck but adaptability, improvisation, and an uncanny ability to read the intentions of others, qualities that later shaped his extraordinary capacity for navigating markets in which perception itself becomes a force as powerful as fundamentals. After the war, he immigrated to England, working odd jobs while studying at the London School of Economics, where he encountered Popper's philosophy of fallibility, the belief that humans operate with incomplete knowledge and that systems evolve through the constant interplay of perception and reality. And it was this philosophical seed that Soros later transformed into his theory of reflexivity, the idea that markets are not reflections of objective truth, but dynamic feedback loops in which beliefs, actions, and outcomes continually shape one another, often driving prices far from equilibrium. Armed with this worldview, Soros entered the world of finance not as a trader chasing patterns, but as a thinker, decoding psychological pressure points. And his early years at merchant banks in London and later in New York revealed both his brilliance and his dissatisfaction with traditional investment frameworks, leading him eventually to found the Quantum Fund in 1973 with Jim Rogers, a hedge fund whose returns would soon become the stuff of legend. Quantum strategy, fueled by Soros's deep macro perspective, operated on a simple yet revolutionary principle. When a misalignment between perception and reality becomes extreme enough, it creates an opportunity for asymmetric bets of massive scale. And Soros's genius lay not only in identifying those dislocations, but in knowing when to attack them with overwhelming conviction. Nowhere was this mastery more visible than in the 1992 showdown with the Bank of England, where Soros, observing the structural contradictions within the European exchange rate mechanism, recognized that the British pound had become fundamentally mispriced, propped up by political pride rather than economic reality, and that the Bank of England would eventually be forced to devalue despite its insistence otherwise. As the British government struggled to defend the pound through interest rate hikes and market intervention, Soros executed one of the most audacious currency trades in history, borrowing billions of pounds to sell short, a move that pressured the system to its breaking point and culminated in Black Wednesday, when the UK government capitulated, withdrew from the ERM, and allowed the pound to float instantly, delivering Soros a profit estimated at $1 billion and cementing his reputation as the world's most formidable macro trader. Yet Soros's story cannot be reduced to this single moment, for the reflexive lens through which he viewed markets allowed him to foresee and navigate crises across decades: the Latin American debt crisis, the Japanese asset bubble, the Asian financial crisis, and countless smaller dislocations where psychology, policy, and speculation collided. What distinguished Soros from other traders was not infallibility indeed. He often emphasized his mistakes, but his ability to reverse positions rapidly when new information contradicted his thesis. A discipline grounded not in ego, but in philosophical humility. For Soros believed that the key to survival was recognizing error faster than anyone else and adapting accordingly. This mindset allowed Quantum Fund to achieve returns that defied conventional mathematics, averaging over 30% annually for decades, and turned Soros into one of the richest individuals on the planet. But the wealth he accumulated became merely one pillar of his life's work. For Soros believed deeply that money, divorced from purpose, was an empty pursuit, and beginning in the 1980 seconds, he launched what would become the Open Society Foundations, a sprawling philanthropic network dedicated to promoting democracy, human rights, education, independent journalism, legal reform, and civil liberties in countries where authoritarianism threatened to choke them out. His philanthropy, rooted in the same Popperian philosophy that shaped his financial worldview, sought to build open societies capable of self-correction through transparency, accountability, and the free exchange of ideas. And he deployed billions toward this mission, funding scholarships for Black youth in apartheid South Africa, supporting dissidents in Eastern Europe, aiding refugees, expanding university access, and nurturing democratic institutions in nations undergoing turbulent transition. Yet his activism also made him one of the most polarizing figures of the modern era, admired by some as a defender of liberal democracy and reviled by others who viewed his interventions as political manipulation, a dichotomy that reflected not only the scope of his influence, but the intensity of the global ideological battles in which he often found himself entangled. Beyond politics and finance, Soros's intellectual contributions, published in numerous books and essays, reveal a mind forever wrestling with complexity, uncertainty, and the fragility of human systems. And while some critics dismissed his reflexivity theory as too abstract, others recognized it as a profound departure from traditional economic dogma, a recognition that markets are shaped not by perfect rationality, but by flawed humans whose beliefs ricochet through the system in unpredictable yet exploitable ways. As we explore the deep layers of Soros's legacy, from the philosophy that shaped him, to the hedge fund empire he built, to the geopolitical influence he wielded, we begin to see how his personal history, intellectual discipline, and moral commitments converged into a life defined not only by extraordinary financial achievement, but by a relentless attempt to understand and improve the world, a convergence that becomes even clearer as we step into the next arc of his story, where the lessons of reflexivity, risk, and resilience illuminate how Soros navigated the shifting landscapes of global politics, market volatility, and ideological warfare, especially as we uncover how his later years reveal how Soros transformed from a legendary speculator into a philosopher-statesman, navigating a world increasingly shaped by the very forces his theory of reflexivity had long anticipated: rising nationalism, democratic backsliding, information warfare, financial contagion, and the dangerous feedback loops created when belief and reality collide at global scale. And as we move deeper into this later stage of his life, we begin to see how Soros's mindset, forged in the crucible of war and refined through decades of market combat, evolved into a framework for understanding not only how markets break, but how societies fracture, heal, or harden under pressure. The same intellectual machinery that once allowed him to identify mispriced currencies now helped him interpret political systems as reflexive constructs, where public sentiment, elite incentives, media narratives, and institutional strength feed into each other in cycles that can either reinforce openness or accelerate authoritarian collapse. And this insight became the guiding principle of his philanthropic empire, as he increasingly turned his attention toward regions where small interventions could prevent democratic erosion from becoming irreversible. Through the Open Society Foundations, he poured billions into independent media outlets, legal defense organizations, anti-corruption watchdogs, civic tech platforms, minority protections, court reforms, and educational access programs. Recognizing that democracy is not a static achievement, but a fragile equilibrium requiring constant maintenance, and that the decline of one institution can trigger cascading failures throughout the entire political system. Yet Soros's increasing influence also attracted intensifying opposition. Nationalist leaders cast him as a puppet master. Conspiracy theorists spread myths about his motives, and authoritarian regimes labeled his foundations as existential threats to their power. a backlash that paradoxically confirmed the accuracy of his belief that closed societies fear open scrutiny more than financial pressure, and that the battle for transparency is as psychological as it is institutional. Throughout these global conflicts, Soros continued to evolve as a thinker, writing essays that blended finance, philosophy, and geopolitics with a level of candor rare among public figures, openly acknowledging his own fallibility and reminding readers that even the most sophisticated models break down when confronted with the irrationality of crowds or the unpredictability of human fear. This intellectual humility became a defining feature of his later years, shaping his insistence that investors and citizens alike must remain vigilant against cognitive traps, overconfidence, confirmation bias, ideological rigidity that renders systems brittle and vulnerable to shocks, and his warnings about rising authoritarianism, tech-driven disinformation, and the erosion of democratic norms now read like premonitions of global challenges that nations are only beginning to confront. Meanwhile, his investment acumen remained sharp even as he receded from the daily operations of Quantum Fund, guiding high-level strategy with the same paranoid curiosity that defined his early trading days, always probing for hidden risks, structural imbalances, speculative bubbles, and policy contradictions that could trigger the next major dislocation. Because Soros believed that stability often masks fragility and that the seeds of crisis are planted in times of complacency. This worldview shaped his approach to global events, ranging from the Eurozone crisis to the rise of populism to US-China tensions. And he frequently urged policymakers to adopt more flexible, adaptive strategies capable of absorbing feedback rather than resisting it, arguing that rigid systems inevitably break under pressure. In his personal reflections, Soros often returned to the theme of moral responsibility, insisting that wealth without purpose is inert and that those with resources must act as stewards rather than spectators in the shaping of global futures, a belief that led him to invest not only money but reputation, influence, and time into causes that often placed him at the center of ideological storms, a position he accepted as the price of fighting for open societies in an era when openness is increasingly contested. As we trace these intertwined threads, his philosophical evolution, market wisdom, political battles, philanthropic scale, and willingness to confront the world's ugliest truths, we begin to understand that Soros's legacy cannot be captured by the moniker, "the man who broke the Bank of England." For that moment, iconic though it is, represents only a fraction of the worldview he spent a lifetime constructing. His true impact lies in his insistence that humans must acknowledge uncertainty, embrace fallibility, and build systems resilient enough to withstand the distortions created by fear, greed, misinformation, and unchecked power, principles that apply as much to governments and civic institutions as they do to markets. And so, the deeper lesson of George Soros's life emerges not from the billion-dollar trades or political controversies, but from the worldview that binds them together. A belief that societies thrive when they remain open to self-correction, adaptable in the face of complexity, and anchored by institutions strong enough to resist the gravitational pull of authoritarian certainty, leaving us with a legacy that continues to provoke, inspire, and challenge the world to think more critically about the forces that shape our collective destiny and to confront the uncomfortable truth that freedom, like markets, survives only when we refuse to take it for granted.